In this lesson, we want to walk you through what's called a 50-50 trend trade. You're going to hear that in class a lot.
Order
And I'm going to go
pending.
ahead and place the order because you can do a trend trade if the triggers are strong. And 50-50 just means that the small triggers and large triggers on the large chart haven't both broken the fib. So what you'll
Order
generally see is
filled.
this type of trade either fail or have to be managed a little bit more tightly. And, again, with 50-50 trades, traditionally the last low or a pivot stop out, even on both charts, is probably going to be the target. But I want to talk a little bit more about the management of this for just a second. When you have a 50-50 trade, you have to trail your stop down whenever there's a new divergence that might happen. So whenever we have any higher divergence with a 50-50 look, and notice that the fib is still blue on our large chart, that's traditionally where you'll just move your stop down 2 ticks behind the reversal bar marker on the 5-1 chart. And if it keeps going down, fantastic. And if it doesn't, now we've limited our risk to 3 ticks, 2 ticks, 1 tick as this
Target
progresses down.
filled.
And then ultimately we did make it down to the prior low. And this is where the market's going to end up having trouble traditionally after a 50-50 trade. We're going to see, if it really continues, it'll be great. If we put in a second divergence, meaning
Stop filled.
a double divergence pivot stop out, after a 50-50 trade, the market has a tendency to go a lot higher and either reverse the trend back up, or we look for some sort of continuation to the downside. And, again, this is where understanding the context of a weak bottom comes into play. You add that with the spread of the large triggers on the large chart, you end up not doing trend trade longs on your 5-1 chart. And instead, we actually are going to wait for either a new good bottom from this area here, or we're going to wait for a breakout to the downside. So you can see as we progress here, we have a weak bottom, and we always talk about continuation trades to finish the business.
Order
We have a
pending.
lower divergence pivot. You can't see the prior one, but there's now 2 lower divergences, which is going to enable us to actually do a trend trade short to try to finish the business that we tried on our first 50-50 trade that actually did not make it to the bottom after double divergence pivot stop out. So we actually have a good top with these 2 divergences, and we have continuation, 13-2 triggers, small triggers have rolled over, and we've got a really good trend trade
Order
short
filled.
look with nothing in our way on the 5-1 chart. And traditionally, after this weak bottom 50-50 continuation look, we almost always make it to where we were going before, which is at least the prior low on the large chart, the pivot stop out. So you can see we've gotten filled on our trend trade short. And again, this is where, some people will say there's a yellow 1-to-1 there. And if you really get comfortable with the idea of continuation, with a really good looking trend trade short on our 5-1 chart. And when I say really good looking, I'm talking about 2 fibs, multiple triggers. I mean, literally, if you only looked at the 5-1 chart by itself, it would be a very, very, very powerful trend trade short look. And, again, now we're going for our normal $200 first profit target. We can talk about management here. Again, there's 2 divergences on our 5-1 chart, but notice where the small triggers are. They're outside of the large triggers on the 5-1 chart. So traditionally, we're not going to exit because of a divergence when our small triggers are outside of the large triggers. If it happens again, excuse me, with these small triggers inside, then that's going to be a different scenario. So again, now you can see we've got a divergence from our resistance, right from our trend trade area, which is very good. And now we've got a new yellow 1-to-1 that popped up on our 5-1 chart. So, the objective is to get to the prior target that you had on your 5-1 chart and your 13-2 chart from the first trend trade. So this is a really good 13-2 continuation look with a double divergence high, lower divergence.
Target filled.
A really good trend trade look, and you can see we've gotten our first profit target already. So we can move our stop down to break even plus.
Target
and
filled.
you can see we've now reached our second profit target. May have a little bit more to go, but anytime you've got close to $300 or $400 and you get to a pivot stop out on your 13-2 chart, never a bad spot to take a profit. We may actually make it down to those yellow 1-to-1s, which might have been a few more ticks. Again, I'm a big fan of getting out a couple ticks before a major area. That way, if it bounces really quick, and you can see there's our yellow 1-to-1s. That way, if it bounces really quick, sometimes these things go up really fast and you end up giving away all of your money. So I'd rather get out on the way down than try to be reactionary, getting out on the way back up. So you can see we actually hit the yellow 1-to-1 dots now. And this is where traditionally pivot stop out on the large chart and pivot stop out on the small chart. You can see that's how the market usually reacts.